completed, right? Now this would be put in capital work in progress, right? Now this, once it gets completed, CWIP, capital work in progress, will move towards fixed assets on completion. But at this point of time, the factory is kind of being built, so you keep it under capital work in progress. Similarly, if there is an intangible asset that is under development, let's say a software is under development at this point of time, this will be put under intangible assets under development. As soon as you develop it, you finish developing it, it will move towards intangible assets, long-term intangible assets, right? So that's the first bit that comes in, which is how do you deal with capital work in progress or intangible assets under development. Practically, they have to be included as a part of your total long-term assets that come up, right? So essentially, that's the premise that that comes up here. The next bit is long-term loans and advances. For example, security deposits that you have given for renting out a premise. So if Aisher has rented out has taken a premise on rent, that's where the security deposits would come in. Or loans given to employees. If you have given any kind of loans to employees, that would also kind of come in, right? They will repay it, and that's a sort of an asset for you. Other non-current asset could include things like fixed deposits for more than a year. So if the company has gone and done an investment, which could be a fixed deposit kind of an investment, and then that's for more than a year. Other current assets could be assets such as accrued interest on deposits. Deposit something in the bank, there's an accrued interest, you have not yet materialized or taken it out. Loans given which may come within a year. Unbilled revenue would also be under other current assets, essentially, right? Let's look at the balance sheet and let's go to the notes. So let's talk about note 12 onwards, where we get this. So note 12 talks about non-current investments. They would have investments in certain companies that would come here. Then you have long-term loans and advances, which talk about if you have given any kind of capital advances, security deposits, loans and advances to employees, etc. Balance with the government authorities that you've already paid, that's there. Any kind of tax that you had paid in earlier years, but you're going to get a minimum alternate tax credit entitlement. Any kind of advance income tax that you have paid, right? So that additional tax that is paid is long-term loans and advances. You'll probably receive them at some point of time. Other non-current assets are kind of fixed deposits. Then you have current investments, which is all the money that is basically cash equivalent is lying in some debt mutual funds kind of data. And that's effectively cash and cash equivalents. So all current investments have to be treated same to the cash and cash equivalents. You follow subsequent data points, which is inventories, lower of cost and net realizable value. What's the inventory that they hold? Trade receivables. What are the trade receivables that they have? Outstanding for a period exceeding 6 months. Secured considered good. Unsecured considered good, unsecured considered doubtful, and all those are kind of given there in details. And then you have cash and cash equivalents, short-term loans and advances, any security deposits that you have given, any loans to related parties that you have given, similar group companies, loans given to those, any advances given to suppliers, etc. will come under other loans and advances, right? And then you have unbilled revenue, interest accrued on current assets, on fixed deposits, etc. All that would be a part of other current assets. So primarily speaking, that's the broad sense of all the other headers that are there on any given financial statement under the annual report. That's the important part that we would like to kind of discuss. We will build upon this with subsequent other companies and discussions around those companies. But a basic level understanding of all the headers is what we wanted